Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on natural gas today. It is December 13th, actually CPI day, the last CPI print of the year 2022. December 13th. It is a Tuesday, and it's about 1 o'clock. So intraday, so candles may look different by the time this is posted. We're going to look at natural gas. And another programming note, we're looking at the natural gas futures this time. Last time we were looking at natural gas spot price via currency.com. I noticed there is a material difference between them now, possibly on account of the wild action we've had the last few days. It's exactly the same pattern, to be clear, or patterns, I should say, but different prices. So I'm just going to use the actual natural gas futures. And so that's NG, I believe the ticker symbol, yeah, NG1, right? So the Henry Hub natural gas futures. So let's start with the monthly chart just to kind of orient ourselves. And again, definitely take a look at the previous video I put out specifically about natural gas. As we think about this, we've had this like monster rally for 26 months, right? And like, let's just put that in context. You know, somehow you bought the Pico bottom. It's up 600%, almost 600%, right? And we've certainly had other periods, this period right here where we rose, what was it? So it's not to say that is an unprecedented rise, but at some point we're going to get a retrace. Like, look at that retrace, that retrace. That doesn't mean it's going to have to be as dramatic, but at some point this cycle is going to retrace, and every retrace starts with a swing high, right? And if you're not familiar with what swing highs are, definitely take a look at the specific video I put out about that. In this case, this swing high happens in August, so the 26th month of this rally. And just put a finer point on this, I should have added that. That's your swing low. And again, have a separate video about swing lows as well. So you knew that you had a swing low once you crossed above there, right? So this rally started June 2020, or I should say, right, like the low was in June 2020, and you crossed above it for the first time in July. You can see you actually pulled back. But then that next candle, August, you broke above it decisively. And then we've been in an uptrend ever since then on a monthly chart. And that changed, right, on month 26 when we broke below the low of that month, which marked the high. So that's how you get your swing high, right? So to be clear, that is below $7.53, right? So below $7.53. That marks a swing high, and the high for that month was $10. So a pretty big month it was. And so since that month in August, so September is when we made that new low, and then October we had followed through, but then we pulled back, right? Or I should say we had a rally, right? A lower wick is always a rally on a lower time frame. We kind of consolidated in November, and then in December we pulled back as well, but notice we rallied back, not unlike what we saw in October, I suppose. And we'll zoom in to see exactly what's happening. But big picture, this rally is pausing right now at month 26, and it's very likely, right? The idea is that it would be moving into a longer term low. And so the question is, was this our longer term low here? Which, if it was, it would be incredibly mild, right? Compared to ones that we've had in the past. Again, like this one, like that one, like that one, the one that we just came out of, right? But it could be that we're just so bullish that we're going to just get a really mild, long-term cycle low and then just rocket ship out of there, right? And so if we think about what do we need to see? So first off, we need the month to go green. That's probably one of the most simple things. And I talk about this channel is all about trend analysis, using that to your advantage, using that to understand when we're trending higher to go long, understand when we're trending lower to get out of the way, or if you're aggressive, go short. One of the first things, you gotta be green, right? Like if you want to be long, right? If you want to be long, you want it to be green, because green means prices are going higher. It means prices are higher than where they open. So for the month of December, our opening price was $6.96. Call it 97 cents. And so we're hovering right below that, and that's what we're trying to fight with. If and when we can get above that, that makes the month green, and that is step one. Step two is you want to be making higher highs and holding higher lows. And so in this case, and you want to avoid making lower lows, which is what a downtrend is. So in this case, we made a lower low, right? You can see earlier in December, we made a lower low below November. That was bad. But we've massively rallied off of that low, and we're trying to go green for the month. So again, that's your first trigger. Are we going to go green for the month? Next trigger, can we start to make higher highs? And that's very simple. It means making a high above the November high. The November high is $6.60, right? Or excuse me, $7.60. So first you go green by getting to about $7, call it, give or take. And then we need to make that move to 760. So now we're making higher highs on the monthly chart, and that gives you a chance to start trending on the monthly chart again, right? So like you can imagine, something like that, right? It won't happen in a straight line. We'll have pullbacks, and that's where the higher low part comes in. You want the pullbacks. That was an ugly drawn trend, but you get my point. You want the pullbacks to hold higher lows. And so that's how it looks on the monthly chart. That's the one of the higher time frames, not the highest. But if we zoom in and look at what that means for the weekly, what a wild week, right? So last week we made that lower low, right? That's what we were seeing on the monthly chart. That's the multiple time frame analysis, folks. This big long hammer candle is what created that massive lower wick on the on the current December candle. So we came in this week and we actually gapped up, right? But then, and we'll look at the daily chart. But now we're just kind of hovering still inside the range of this big red week. So from November 28th. So that's what we need to get out of first. So I talked about how we need to get above 760 on the monthly chart. Well, think about it, right? Like the way things happen is lower time frames happen. Like you get a move on a lower time frame, and if it gets followed through, it cascades to the higher time frame. So before we can get a move to 760 on the monthly chart, we obviously need a bullish move on the weekly chart. In the same way we need to make a higher high on the monthly chart, we need to do the same thing on the weekly chart. And to be clear, I'm going in reverse order and like what's most important, but it's obviously in and we're going to look at the daily chart. We're going to need to actually make a higher high on the daily, which allows us to make a higher high on the weekly. All that to say, the week of November that we get above, that is $7.40. You can see how that works. We need to get above $7.42 before we could get above 760, like just mathematically, right? And then finally, if you look at the daily, wild action. So we gapped up like 10%. So this is this is your Monday candle. Again, this is Tuesday. We gapped up, and we know exactly where we opened because we know how candles work. And I'll like zoom in here so we can see, because this is important. So we opened here, right? We gapped up and like, oh my God, we're going to the moon. And we even go a little bit higher, but then we pulled all the way back. We did not quite fill the gap, right? We almost filled the gap, did not quite. Usually you get a gap fill. I tweeted about it like, oh, looks like we're getting a gap fill event. And just like if I zoom in really quickly, you could see that intraday. You could see, right. So you could see, what is that? Like 12. So you can see like, this is basically your move yesterday, right? So we had this, like, this is your gap, right? Like you can see with this first candle opened massively above this candle. But then we just meandered there for like, this is an hourly chart. I'll get rid of the moving average. But like we just meandered for hours and hours and hours. Then we made a move up. This ended up being a false breakout. We got this is a swing high. Just all these things work on all time frames, folks. So that's your swing high on the hourly chart. And that began your move down. Like, okay, we're going to get a gap fill, expecting us to get to this line here. We obviously didn't quite get there. We bounced here. And what is this? That's right, folks. It's a swing high, right? Oh, excuse me. This is a swing low on the hourly, right? As I said, swing highs begin downtrends. Swing lows begin uptrends. That happens on every single time frame. And so we started a little uptrend here. That's your higher low. That's your higher low. This is a higher low that is held so far today. And so, if you're thinking like just going really micro, you really wouldn't want to break down below like around 675 because that's your last higher low, just kind of like your real-time micro price action. But if you think about the way it worked, like we almost got that gap fill, but then we then opened here and like, look, we've almost made a higher high above yesterday, but now we're just kind of consolidating, contending with this kind of area here where we gapped up. And again, if you think about the weekly chart, it's this level that we're going to have to get through. This is how it looks on the daily chart, right? So your levels are really quite clear, and the fact that we held that gap level just gives you the perfect stop area if one is inclined to try to trade this move. But again, you want to be just cautious. You want to make sure that you're keeping track of how things are changing on different time frames and understand those levels, right? Like, what is this daily move doing to the weekly chart? What is the weekly move doing to the monthly chart? And obviously, if it's not obvious, the hourly candle, like, it goes all the way down. You can, zoom into the 15-minute candles if you, depending on your time frame, if you were scalping, for instance. So makes the levels really clear to watch from here through the end of December. And of course, we're going to get the FOMC tomorrow. That's going to be a big mover of markets in general. And so we're going to have to watch how that looks. And from a cycles perspective, we'll just talk about what daily cycles have looked like really quickly. So we clearly got a daily cycle low, like a short-term low on December 6th, right? And we know that because that's right, folks. Swing low, right? That's how you identify these turning points. Swing lows and swing highs. So just to back up a little bit, this was the start of your last cycle, right? So October 24th, we rallied for 22 days. That was our top. And then we made a swing high. We cascaded lower. Price reversed here. So this whole thing was 30 days. The top was 22 days. And so now we've started a new cycle, and this is day 4. So we're relatively early in the cycle. But notice this cycle ended, and I'll add the moving average back in. It's just a helpful visual aid, I think. But that cycle only rallied for 5 days, right? So it sometimes things like this cycle rallied for 22 days, but it doesn't mean that's some kind of rule where a cycle has to last that long or anywhere near it. And especially if you think about it, like that weekly chart that we looked at, the monthly chart, the way we saw that swing high, this is that swing high that happened on the monthly. This is the daily swing high that caused the weekly swing high that caused the monthly swing high that we saw, in this monthly chart, right? This swing high here, right? And so you can see we've clearly been in a downtrend on the daily chart, and now we started to try to break out of it here, but then we failed. We retraced, and now we're basically just trying to get back up here and then that becomes a decision point. I hope you're seeing that. I'll just draw this line, right? You can imagine this was a big move down, and then this move, he's trying to reverse that, right? It's trying to avoid being a higher low, or excuse me, a lower high, which would be something like that and then that, right? Instead, we're trying to do something like this, right? It needs to do something like that at this point. But that's how you want to kind of think about it, almost in your mind's eye. This looked pretty good until we got this pretty big droop down. This pullback gave back a lot of this rally, not super healthy, but it can still recover, and we're almost back to this decision point. And that's where you're going to want to see, again, that's where all the levels kind of converge. This high up here is at 760, right? So that tells you, okay, are we potentially going to try to make a run back to all-time highs around that, or back to that $10 level that we were at in August? Again, all thinking about the bigger picture, how this is going to be changing. So we'll leave it at that. I'll say this is definitely looking more bullish than crude oil itself, and which makes sense. They obviously don't have the exact same use cases. It makes sense that they might be correlated, but not exactly the same. But we'll leave it there. Pretty clear levels here. I'll definitely make sure to update as things happen, and I'll be putting out updates in real time on Twitter as well. So if you're not following there, definitely take a look at the link in the description. Thanks for watching.